there was, some hubbub in the news regarding Mr. Powell and what the Fed was anticipating doing next month at their monthly meeting. Yeah.
Yeah.
So
it's been expected the whole time.
It created some stir, Brad. What were they talking about?
So first of all, whatever the Fed does doesn't have direct effect on mortgage rates.
What?
Yeah, it does.
So if they raise or lower the Fed fund rate, it doesn't affect mortgages directly?
It does if you have an adjustable rate mortgage or
there you go.
So a home equity line of credit. Whenever a news person is on the news going, this week they're going to lower the Fed fund rate, your mortgage is going to go down. They don't know what the hell.
They do not.
No. In fact, if you listen to some of the financial, economic advisors that they have on, now, they're not a reporter. They're having them on the show. That's great. We need to lower the Fed fund rate. We need to lower the amount of interest that America's paying in their debt. It'll lower credit card. It'll help car loans, right? All of those things are going to be a little bit of ease. And they've been adding a little tagline quietly, but it's not a good thing for the housing market.
They keep that on the down low.
Nobody explains what they just
how about that?
And another thing to think of is we've had positive indicators that would cause the Fed to lower rates. Those positive indicators are negative for a lot of people. Unemployment's going up, right? Less jobs are being created. No more of the BLS saying 255,000 jobs created, and then 4 months later going, we made a mistake by 180,000 jobs.
That wasn't right.
And they did it, 2 times now?
Yeah.
Hundreds of thousands of jobs taken away. So the BLS report, the last one that came out, showed that only 35,000 new jobs were created instead of the 300 they've been doing every time. So, hey, that's a good indicator that one of the mandates that the Fed has is unemployment, and they are losing a little bit of grip on unemployment, right?
Okay.
So that tells the Fed, hey, we probably need to stimulate the economy a little bit. And then another piece is we've seen inflation continue to tick down a little bit. Friday, we're going to get the PCE. I think it's the one that's up next.
Okay.
PCE is the another indicator of inflation, like the CPI. For some reason, I'm completely blank on what that is right now.
That's okay. People can look it up. That's why Google was invented.
Put it on ChatGPT. So it's really going to be important to see if inflation is stagnated or decreased, or hopefully not increased. But no matter what it does, the Fed's going to lower the Fed fund rate.
Okay.
Now, here's where mortgage rates may not like that. Like a year ago, August 2024, when the 10-year Treasury is sitting at 3.36 and interest rates were sitting at about 6.5, in some cases 6.25. The Fed lowered the Fed fund rate 50 basis points. September, we got a CPI report that showed that inflation had increased, and we also got a crazy wild BLS jobs report that showed a whole bunch of jobs were created, and the 10-year Treasury went to 4.5, and interest rates set in the 7s to 7.5s all the way until June or July of this year.
Yep.
So don't forget, they also lowered it in November a quarter.
Yep.
So interest rates went up again, right? So I don't know why people hear us say when they lower the Fed fund rate, it doesn't necessarily affect mortgage rates. The last 2 times rates went up for mortgage rates. Your car loans, your credit cards, your home equity line of credit, all of this came down. No one's buying a house with a home equity line of credit. They may be using it as a down payment.
Yeah.
So
unfortunately, what you started all that with was news people come on and talk about it. They misrepresent what it actually means. They bring on somebody who isn't specific enough. And that's what people listen to, is what they see and hear on the news. And so, plus people don't necessarily understand the differences in interest rates, because I find news organizations say they don't use the exact words Fed fund rate. They say interest rates are coming down. And so everyone thinks that all interest rates are coming down, and they're not. They're all different things.
Right. And there are mortgages that are affected.
Sure.
Again, home equity line of credits, open or closed, HELOCs are closed-ended, or any type of adjustable rate mortgage.
Which is less popular nowadays, but there are people that still have adjustable rate mortgages.
Yeah, but it doesn't mean the adjustable rate mortgage you're going to get tomorrow is lower. It just means if you have one already, that your margin and index are going to come down, because the index is going to come down and your rate is going to go a little lower at your next adjustment.
There you go.
Okay, so is it a good thing? Yes. if interest rates are going to come down any because of the Fed fund rate lowering the rates, we've already done it. They've already baked it in the pie, right?
Right.
The stock market's not going to go crazy when he does it because he already said he was going to do it. Where will everything change? If all of a sudden he doesn't do it,
Exactly.
right? Because everything that's already baked in the punch or baked in the cake or whatever they say, right? They're going to go, oh crap, we baked that in there when we weren't supposed to, right? So
Yeah.
you'll see some changes. I think we're going to see a 50-point basis drop.
Oh,
I
okay.
really do. Unless our report comes out different on Friday.
I was going to say, so the intention is when he would announce this in September. At what point of September does this happen?
I'd have to look at when the meeting is. I think
Ish.
it's like the second week.
Okay.
Yeah.
So
And
we
maybe
still
the
have
first week of them.
another week or two essentially before we really find out what happens, and yeah, we really shall see. Definitely, I think when all is said and done, 2025 will be one of the lowest years in real estate.
Absolutely, it already is. Yeah. So,
Yeah.
and so is 2024.
Yes, it was
one of the lowest ones as well. And why is that? Well, we have high interest rates. Homes cost a lot of money, and there's been a lot of uncertainty of what's going on.
Yep.
And it's really, I don't believe it's a political thing that we've had 2 bad years in real estate. I believe it's the fact that we stuck everybody in 2% and 3% mortgages, and you get a 6% mortgage, and you get, gosh, I can't buy a house unless it's a 3% rate. Like we trained people that these rates were normal.
Yep.
And they've never been normal. Actually, the rates we're in right now are the normal rates.
Yeah.
And it's like if gas dropped to 25 cents a gallon and it stayed at 25 cents a gallon for 24 months. And then it went to $5 a gallon.
Yep.
It'd be the least amount of miles driven ever.
I often refer to it as the "what have you done for me lately" theory.
Exactly.
Because, like you said, we are in a very normal market right now, interest rate wise. We have often, granted it's been a few years, but people would talk about, oh my gosh, interest rates used to be double digits. I remember when interest rates were 10%. I remember when interest rates were 18%. The people buying a house today do not care about that. They're in the current market, and there's still so much talk about what rates were 3 and 4 years ago, because those people who bought a house or refinanced back then are living that interest rate. And so they say, oh, I don't want to give up my 4.5% interest rate. And I don't blame them whatsoever. But, those who either have never bought a house before or it's been a long time since they bought a house have to realize the 6% is really good. And if we can stick around there, that's very healthy.
Yeah. And, while people complain about rates going up, their rents skyrocketed as well.
Yeah.
And I sent you a video today of a realtor that has to negotiate with a boomer.
Okay.
And the realtor walks in the room and looks at the boomer and goes, "You're not going to believe this. We have an offer for $895,000 on your $900,000 house." And the boomer goes, "Well, I'm not giving up $5,000. What do we get? Give away $5,000 now? Then it'll be $10,000. Then it'll be $30,000. Then everybody in the neighborhood will be giving their house away for free." And the realtor's like, "So no, we're not doing that." And he's like, "So you're telling me that the house you've had listed at $900,000 for the last 3 months that we got an offer for $895? It's only $5,000. And he looked at me and goes, "Well, I ain't giving the house away."